Do not buy dividend paying stocks if you do not understand this. Warren Buffett could choose to pay a dividend every single quarter, and he does not, and he has not ever done it. There's a very specific reason for that. Look, I have been a financial advisor, I have been a licensed stockbroker, and I have built my own personal investment portfolio from scratch. What I have learned is that we all suffer from a psychological trap that can keep us poor if we're not aware of it. This concept is called the certainty effect. So the reason you're so fascinated with the idea of dividends is because, the money's going to come in, all you have to do is reinvest it, and there's no doubt that you can make it work. And that's great, but it comes at a cost. So the certainty effect is a cognitive bias where we overweight outcomes that are certain compared to outcomes that are highly probable, even if that probable outcome has a better expected value. Now, expected value is just a statistical term. It just means even when it's better for you. Um, so look, the truth is in every aspect of our lives, we will overpay for certainty when given the option. So you would rather know that you have income coming in every quarter or every month than to accept the risk that you could potentially lose money, even though it's highly probable that you're actually going to outperform your dividend paying stocks. So if you want to maximize the performance of your portfolio, then you need to understand this about dividend paying stocks. The whole point of investing is to outpace inflation and therefore preserve your purchasing power over time and ideally actually grow your wealth relative to your purchasing power. With that being said, your income that you make every year from your investments is not as important as the total return. So your total return, all right, is going to be the appreciation that you get from your asset that you hold, plus the income that you generate from that asset, all of that over the actual amount that you put in or your principal. So let's say that you have a stock that's paying a yearly dividend of 4%, but the company actually loses 5% in the actual value of the stock, right? Okay, well, you've actually lost 1% on your money. So you've certainly lost money in the market because you would rather have the fact that you're going to get that 4% from the dividend. Okay. Let's make it a little bit less extreme. Let's say that the company's earning 4% a year, or they're paying a 4% dividend every year, and the company goes up by 2%, right? So you have a total return of 6%. Now, that's still not great because guess what? The S&P 500 averages 8% a year. So you could, first off, avoid the tax implications that come with owning a dividend paying stock, right? So if you're earning a dividend, that dividend is taxable income that you will have to pay. So that's the first thing, right? You've created a tax liability for yourself and you've not performed as well as the market. So that's the first thing that you need to understand about dividend paying companies. The next thing that you should really understand about them is that companies that pay dividends, investors expect them to pay that dividend every single quarter. And they're going to pay that dividend no matter what. So even when the company is coming upon hard times and may not have the profitability that they would normally need to be able to pay that dividend, what are they going to do? They're actually going to borrow the money that they need to pay that dividend, and they're going to use that money to pay out to their investors. Now, all well and dandy until things get really bad, right? So if you have real structural problems in the market, or this company is just coming upon really hard times, then um, that could be problematic. It's going to create a little bit of a downward pressure on the actual price of the investment when their balance sheet and their financials kind of get turned upside down as they're just borrowing to be able to pay a dividend instead of being able to pay that out from their profits. And this is something that's been going on since stocks have existed. Okay. So back to the 1800s and even before, you had this problem of companies needing to pay dividends to their investors or paying dividends to their investors off of borrowed money. And some of those companies back in the day would just completely blow up because they never actually had the money or the profits to be able to pay their investors. So you just have to be aware of the incentives around that, right? It can create a downward pressure on the actual value of the stock when they're having to borrow money to pay you. Um, the last thing that I think is important to understand is that even if the company is profitable, right, they're taking their profits and they're giving it to you. And so now you have to decide that you want to reinvest into the stock, right? Um, but you might not. And so this is exactly why, by the way, Warren Buffett doesn't do this. He doesn't want to pay the future growth of the company to people who don't know how to manage it as well as he does, right? So he keeps the money inside the company. He reinvests the money himself, okay? And that then contributes to the growth of the company and the value of that stock over time. So that is the reason why you just have to be careful when it comes to buying dividend paying stocks. There's this innate downward pressure that's on the actual price of the stock, which makes it a lot harder for you to keep up with just the standard market indexes of the S&P 500 or the Nasdaq. So I know you've already made up your mind. You're going to buy dividend paying stocks. That's totally fine. What you need to think about, though, is where the income side of your portfolio really should sit, right? So, as a financial advisor, I'm no longer, this is not financial advice. Um, you have this concept where you need to allocate your growth versus your income based upon your age. So as you get older, more of your assets need to be in income because you're going to stop working, right? And so you want the money that you've accumulated to actually be paying you in income versus being focused on growth, as well as for other reasons. But anyways, when you're young, you don't need a ton of income. So if you're young, you really focus on getting as much growth as you can because that's going to continue to compound over time. And you want that runway for how long you get to actually compound to be as long as possible. So that's the first thing that you need to think about if you just must have dividend stocks or whatever. The second thing I would say about this is honestly, don't buy individual dividend paying stocks. I highly recommend that you buy income ETFs. Okay, you want to have a basket of stocks that are paying you an income, or maybe even if you allocate to a different type of an income strategy, like some of the option strategies that these providers offer. But diversify your risk. Okay, if you're going to focus on or you're going to accumulate income paying assets, diversify the risk. In reality, the best uh, income paying investment is going to be real estate. So just keep that in mind. We'll talk about that a little bit later. Um, anyways, if you just have to buy individual stocks, if you just have to, I get it. Look for dividend paying stocks that have an increasing dividend over time. Okay, you want to see that going on. It means that the company's healthy and that you're not going to run into some of those horrific problems where the profitability goes down and they're having to borrow, and then next thing you know, the company blows up. Um, and also, just make sure that you're reinvesting your dividends. Once again, unfortunately, if you just have to have your dividends, you're going to be paying taxes on them. So, as much as you can reinvest what's left over. Other than that, just make sure that you're calculating your total return so that you're not just underperforming the market for absolutely no reason at all whatsoever. Anyways, I hope this was super helpful. On this channel, here or here, there's going to be another video about psychology and how you can use it to your advantage in creating a better financial future for yourself and also just a better, more productive healthier, happier life. So if that is something that is of interest to you, make sure you hit like, hit subscribe, and I'll see you on the next one.